Welcome to Breaking Banks. Welcome to Breaking Banks. I am your host, Brett King. This week, we return to the world of embedded payments and everything that's going on there. Of course, the big news at the moment is Apple releasing their high yield savings product. I'm surprised it's taken this long for Apple to do that, given the success that other platforms have had, offshore in particular. The US trails some of the innovations on the mobile wallet space. Obviously, if you look at Alipay, their Yui Bao savings feature that they added to Alipay back in 2018 had a monster, actually it might have been earlier, it might have been 2016, had a monster response at $1.3 billion of assets under management. So it'll be really interesting to see how the new high yield savings account for Apple is tracking. Still early days, but also clear that Apple is going to increasingly, from a behavioral and embedded payments perspective, infringe increasingly on banking as, really finance just becomes embedded in your way of life, access to credit, the, behavioral savings, all of those sort of things. So this is really topical today to get into this. We have two guests joining us from Worldpay for Platforms, FIS, is Matt Downs, the Group President at Worldpay. Matt's been in the SaaS space and Fintech for 25 years, with a good focus on security. He's done work with First Data, Century Payments, Vantiv, later branded as WorldPay, obviously acquired by FIS. Matt, welcome to Breaking Banks.
Hey, thanks for having me today, Brett. Excited to be here.
No problem. Also joining us from Qualis Partners is Becky Kopplin. She's a payment strategist and product leader. She's independent. She began her career 20 years ago at wholesale ISO or ISO. She ran ministry brands, and she really consults on that nexus of software, SaaS, and payments technology. So Becky Kopplin, welcome to the show.
Thank you. Thank you for having me.
So let me start off with, so from an ecosystem perspective, and Matt, maybe you jump in first, and then Becky, I'll get your view. But from an ecosystem perspective, things are changing fairly significantly right now. We've gone from these proprietary, core industry rails to now where we're expected, to be able to handle all of these different ecosystems, all of these different players, some cloud-based, some, sort of infrastructure rails. Then we've got crypto and smart contracts and all of this other stuff. Now we're talking about wallets in the metaverse and, smart glasses, how they'll be integrated into this. So it's a very different world. So how would you describe, Matt, the way the ecosystem is evolving for payments these days in terms of like the need for connectivity?
Yeah, I think it's rapidly changing. Just if you look at over the last 5 to 7 years, where payment gateways were kind of that payment gateways and other architecture were allowing for kind of switching on the front end. But I think we're going to see, Brett, is kind of an evolution of two stories. One, either very open platforms, and I think we're seeing this to the evolution of orchestration platforms that do provide value to certain segments of the market. In other cases, you're going to see platforms that are more vertically or horizontally integrated, where more of that delivery is consumed through maybe a single partner or maybe several partners. And I think there's pros and cons to kind of both models, and I think we'll see them both play out, much like we've seen in kind of the technology industry over the last decade or so.
What are your thoughts, Becky, in terms of that ecosystem play?
Yeah, I think folks are looking for connectivity, and I think they're looking for optionality. But what I see is all of that converging around software platforms, especially when you're thinking about the way SMBs and mid-sized businesses are consuming financial services. They really kind of no longer want to go and a la carte this, right? I want to go to my local bank for a loan. I want to go, to maybe a more national bank for my bank account. I want to go to, local, next door, sales ISO for my merchant services, right? They're really no longer thinking about these things as independent. What they want to do and what they're seeing more than anything is a software-led payments and software-led embedded finance, where the SMB wants to consume that within context of their business, within that kind of vertically focused SaaS platform that they're using to run their day-to-day.
So this requires sort of a different thinking. We're talking about payments workflow in terms of engineering this connectivity, but a lot of this is now moving to the cloud because of the fact that we're trying to integrate disparate platforms, and the cloud is the place where we can sort of bring this together. So how important is it for both payments companies and SMBs that are utilizing payments to be cloud integrated these days? Did you want to start off with that, Becky?
Yeah, absolutely. I mean, I think, kind of as I imagine talking to a software platform or even a provider, anytime you're going to say something like on-prem or single tenant, I think you've already kind of lost the game. I think that they're complicated, they're heavy, they're slow, right? The innovation there is near impossible. And the customization that then happens at that client location now kind of needs to be upgraded with every new connectivity that you want to bring to the table. So when you're talking about the ability to innovate quickly and connect the needs of those SMBs in real time, like cloud multi-tenant SaaS is currently kind of the only way to do that right now.
Absolutely. Matt, you agree?
Yeah, couldn't agree more, both based on kind of the way Becky answered question one in this piece. Easy is the name of the game, right? Consumer and business expectations have transformed, over the last dozen years, and Amazon was one of the early drivers of that. We've seen Apple continue to kind of condition us as consumers. It needs to be easy. And I think small businesses, many of them are focused on their practice and the headwinds and the macro environment that they're focused on. So software companies that show up that are cloud native, that are actually able to deliver multiple chunks of functionality. And we're going to see embedded finance and things that you never thought a software company would probably show up and do. We're going to see this evolution take hold over the next 3 to 4 years. And candidly, it can only be done one way, and that's, through a cloud native architecture.
So Matt, we hear talk about embedded payments, and we've got these other integrated payment models and things like that. But how would you differentiate? What's different about embedded payments versus the way we used to build integrated payments into systems?
Yeah, thanks, Brett. Like, that's such a layup question. So I was one of the original authors. I was one of the original authors of the integrated payments model. Back in 2008 at Century Payments, we partnered with Radiant Systems, now NCR, one of the world's largest hospitality companies, again, kind of going back to this cloud question, and help them essentially build an integrated payments model. When in essence, Brett, all it was a payment application with a different sales and service delivery model where it felt integrated to that end business. Where we've gone with an embedded payments is it's much like that Uber experience, right? The two-sided experience from both payments and banking, both as a rider and driver. And we're going to see that proliferate throughout the experience, right? Where companies like Worldpay specifically, and this is one of my responsibilities, is embed our technology through these cloud native companies to where to the business, it feels like the software company is delivering the end-to-end experience, and not just payment acceptance, but it could be business DDA, small business lending, inline consumer finance. How does all that get packed up into one experience, helping that software company who's that mission critical software that's helping that small business operator or medium business operator run their business, create that seamless experience? Because, much like payments companies, software companies are fighting to create differentiation at the point of sale. Because again, expectations have changed of what should be delivered there.
No, yeah, and I would think that the big difference there, no, sorry to jump in, but I think the big difference there between integrated and embedded, because integrated is like I click pay, right? And it leads me to a place where I make the payment, right? That's fine, that's integrated.
Right.
I think embedded, really what makes that magical is that it's in context, right? Like you mentioned Apple at the opening, right? Like every Friday afternoon, I go to a local brewery to work in the afternoon. So I hop in my car Friday at 1:00. My phone goes, hey, 10 minutes to the brewery, take Maple Street, it's open, right? Like, and I hop in there and I go to pay, right? And I just do that from that same phone, and it pops up with the card that I choose because it's in context, right? All of this stuff now happens within my normal workflow, and I didn't have to think about it, right? Like my maps popped up, my payment method popped up, all of those things happen. Like that embedded is where really kind of what makes that magical is in context. It's when the need is present, we beat you to that, right? Like we're presenting it right in the moment. You didn't have to think about it.
No, I think that's the key. And you've both emphasized this lowering of friction, the requirement for lowering friction. So one of the areas where there's still a fair bit of friction in the US and in the UK, Europe, is merchant onboarding. If you look at the advances we've made, even in the US, Square really attacked that market, here. But if you look at the success of the Chinese mobile payments models with their QR code, being the basis of merchant onboarding, really, really simple onboarding process. And that led to massive network effect for their payments systems there. So in 2021, $76.8 trillion of mobile payments went through just two Chinese mobile payments company, Alipay and Tencent WeChat Pay. It seems like merchant onboarding was the secret to unlock that, what is now double all of the plastic card payments in the world. So, talk about how, that is changing the process of merchant onboarding and, where we can expect, less friction in that. Maybe Becky, you jump in first and then we'll ask Matt.
Yeah, it's funny. The first way I think as an industry, we decided to try to solve this. And I think Stripe kind of led the way in this a lot of ways was to say, hey, let's just stage it, right? Like, hey, with 5 pieces of information, right, you can be up and accepting payments. And what that ended up feeling like to a lot of customers is a bit of like pulling the rug out from under them later, right? I get up and running and then, $2,000-$3,000 into, and, Square with Chase behind them as well, that same experience, right? Once I hit that like $2,000 mark, all of a sudden now you've frozen my payments and you want all of this additional information. So I think we've tried this concept of let's just not ask for all of that data up front. Let's do it later. And it makes it for a very disjointed experience for some of those merchants. But I think pointing back to that concept of software led, I think vertically focused SaaS platforms know a whole lot more about their organizations and those potential merchants than we know, and really can help us instead of like the standard, 12 or 15 data points that we collect. What more could we know about this organization? Is there a license code, right? Like if it's a photography services, how many photos do they have up, right? Like do they have preferences or profiles elsewhere that we could pull in? So I think there's this dynamic nature of merchant evaluation that really could be fueled by what software platforms already know that we as payments experts do not know, right? Because we aren't in those little niches.
Yeah, no, Becky, you said it really well. I do think it does come down to the software company and the model that they're running, to Becky's point. So when Square first took off, they were powering a lot of what we'll call micro business, right? Where it was a few transactions, whereas you matriculate up to software companies with a larger monthly subscription fee. That experience has got to be crisp, and you hold that business's funds for a day or two, and there's blowback, and it's a lot bigger than payments. They put the entire software relationship at risk. So, but I would share, like here at WorldPay, we're powering multiple different underwriting models, either internally or through partners. Today, I have over 500 partners. You can get a mid in 30 seconds. Like you can spin a client up in 30 seconds to get them provisioned to go. But to Becky's point, the friction is going to be someplace in there, right? From a regulatory risk and governance perspective, someplace in there, you've got to know who you're funding. It's either going to get done up front in the underwriting process or on the backside. Where I do think there's big opportunity for the industry is exactly where Becky was going. That's how do you pull in that demographic data and that geo data and the other metadata around that account to kind of help you better understand that business. One of the things that we've done here is most of our partners are very vertical in nature, so that risk profile is pretty homogeneous in the portfolio. So once you kind of understand customer number 5, the rest of them right behind it look pretty similar, right? And that allows for that quicker pull through, where a horizontal like Square on any given day, they can be dealing with hundreds and hundreds of different risk profiles.
So let's sort of think a bit in terms of where we're going with this, because there's a lot of talk about the metaverse right now, but we've also got Apple's reality smart glasses and Meta, increasingly working in this space as well. But not only from a VR perspective, but augmented reality perspective, and we are going to start to see these payment scenarios that are really low friction, gesture based, head mounted display. You walk into a coffee shop, your order is taken by the barista, driven from your smart glasses, and the payment is a gesture or something like that. So as we start talking about that, is there more control that's given over to sort of the operating systems at the consumer end or at the SMB end, or is this still about the plumbing? My fear is that the Apple wallets and the Google wallets and the smart speakers, they become the new gatekeepers of payments experiences. But Matt, how do you think that's sort of all going to pan out over the next few years?
Yeah, a couple thoughts. One, it's so funny that these movies that we've watched over the last couple of decades all come true, right? I feel like what you're describing is Tom Cruise in the Minority Report, right, where he went in the Gap and they were scanning his eyeball.
Yeah.
The reality, but I think the innovators are going to drive the market, and that's my business, right? I mean, we're out there finding the people that are going to unlock these new use cases, these new technologies, and power them. I think what we see as a macro trend, if you just think back over the last couple of decades, is more and more you're seeing the technology move closer to the consumer, right? Even if you just use banking as an example, for many of us, I'll date myself, we all started out as a teller, then we moved to the ATM, then we went to a web-based online banking, then banking ended up on our phone, and now that phone's right at the point of sale, right? So I think we'll continue to see many of these technologies move closer to the consumer, and I think the businesses will be challenged to provide those experiences. And to us, it's the innovators of the market that are going to create those experiences. And that's what we do. We help power them, standing behind them, kind of where their knowledge drops off from a technology standpoint to bring in the financial technology part where it actually connects to traditional banking and acquiring plumbing.
Okay. Becky, where do you envisage this going? As a consultant, I mean, obviously, it's getting easier to enable businesses to do some innovative payments things. But, do you see like a whole new evolution of e-commerce, m-commerce, glasses commerce sort of coming with these payments innovations?
Yeah, I think we'll continue to see that evolve. And what's fascinating about it is on the front end, it feels like it's an entirely different concept, right? Like I'm gonna pay with my glasses. Like this is so very cool. In the reality behind the scenes, it ultimately ends up becoming a traditional transaction. And all of those cool technologies are about authentication, right? How do I approve this transaction? How do I initiate this transaction? At the end of the day, it's still going to process on a standard rail. And so from the back end, that kind of gives us a benefit in that we already know how to process these transactions. I think what that does, though, is it gives us a lot of fun ways to bring that back into context, right? At the point I'm thinking about a purchase, I can authorize this purchase. And it's about how we think about authorizing, like Matt's point about paying with my phone, right? Like I don't pull out my plastic card anymore. I tap with my phone. And now what we see is I don't pull out my phone anymore, right? I blink or I wave in front of my glasses. And that still is just going to trigger on the back end some sort of traditional payment method, right? Like you're still going to run a card or an ACH or something on the back end at the very end of the day. And so I think what that does, though, is the winners of that game are somebody who provides that in context for both the merchant and the buyer without kind of exposing all of this payment rail mess that happens behind the scenes, where the buyer really just feels like I just flipped my hand and something magical happened. And we've kind of hidden all of the mess of, we have all this regulatory and multiple rails and, payment money movement on the back end.
But, at the same time, shouldn't we be getting rid of all the mess at the back? Isn't that part of the opportunity?
It sure sounds like it, right?
Well, you'd think, but that requires. We do have a lot of stickiness in those old rails, particularly in markets like the US and Europe. Whereas sort of like if you look at mobile wallet adoption offshore, in African markets and ASEAN markets and things like that, we're circumventing a lot of that now because there's sort of P2P, and real-time payments capability, FedNow still coming next year. But, like if you look, I remember living in Hong Kong in 99, having real-time payments available then, and it's like, it's like some of this infrastructure we're sort of trying to prop up and reduce friction on, maybe we just need to like get some new rails in there. But
don't tell Visa or MasterCard you said that, but
yeah. The issuing bank and the regulators are right there. They want their tax income and they like these traditional rails. They get the I
know. But even if you like, I know MasterCard and Visa are really worried about this right now. But if you look at a lot of these rails that are emerging, the interchange model is clearly a threat. So, but there are other opportunities for revenue in terms of facilitating payments beyond interchange. The ones that are most have seen the biggest growth, particularly in SMB space in places like China, is merchant funding. Getting access to credit, as part of the payment rails or the wallet service. Now, Matt, you've got this payment facilitation tech that you guys use at WorldPay, PayFac. And is this at the core of this sort of glue that you're talking about, or tell me about the role of PayFac in this from a solution?
Yeah, so the business I run, because I'll give my quick plug, is WorldPay for Platforms. And what I would tell you, Brett, is we actually offer multiple different experiences for software companies to help their client. We led off with the integrated payments model. That model is still very true, and it does help a number of software companies think about how to serve their client. We also, on the other end, right, and that's actually where I met Becky years back, is PayFac, right? She was actually one of my clients. And we're the U.S. domestic leader in this space with the most registrations with Visa, MasterCard. One of the things that we strategically did at the beginning of 2022 is we actually acquired a company called Payrix. Payrix effectively is an infrastructure as a service, a payments infrastructure as a service platform, which helps software companies that want to become a PayFac, but can't jump right head first into the compliance risk stuff, some of the pieces we were touching on earlier. And it's essentially a piece of software and a set of managed services that would help a cloud native software company go, how do I get more involved? How do I create these differentiated embedded experiences without having to make substantial investment or hire, tens of dozens of people in a product organization like an Etsy, right? That wants to bring payments in-house.
Right.
We help small, medium, and large cap softwares kind of get into it. So the great news, Brett, is we have this whole continuum of product suite that regardless of where a software company is in their evolution or how they think about payments, we can help them both domestically and globally.
Okay. So, Becky, when we talk about embedded payments, we'll often hear embedded finance term used, sort of interchangeably with embedded payments. But really, embedded finance is a lot deeper opportunity. It's more about how we embed financial services in customers' lives. But could you just articulate how do you see the difference between embedded payments and embedded finance?
Yeah, absolutely. I mean, I would say at a high level, embedded payments is an element of embedded finance being kind of the whole suite of financial services that an SMB or a software platform might need or want. And what's funny is they traditionally got all of these things from their bank, right? Even merchant services, which kind of that ancient term for accepting payments, right? Which we all figured out, 10 years ago or 15 years ago, really needed to be simpler. And that's where you saw that evolution of that payment facilitator model in organizations like the ones Matt runs. And what we're going to see is increasingly, again, back to, it sounds like a broken record here, back to in context, these SMBs want to buy all of their financial services that way in context. So they don't want to have to go to their bank. And you think about the role then.
Just make it as easy as possible, right?
Yeah. Like when you think about what all about an organization, if you're processing all of their payments, right? Like, and what you could then use that data for, like to do real-time capital lending, right? Hey, we saw that this customer that you do a lot of business for just placed this massive order. We trust you. We trust them. Here's some real-time capital to help you fulfill that order. Now, all of a sudden you can deliver that in context. Imagine being able to do lending, right? And of almost micro lending in context. And that would expand to, DDAs, expense management, right? All of those things now become super embedded with the way the organization does their business instead of very divided today, where I have kind of these separate pockets of services. So that's how I would see that coming in and playing with the embedded payments system we have today.
Well, I think buy now, pay later is a good example of that, right? Buy now, pay later is access to contextual credit that circumvents the use of a credit card, and so now suddenly, if I give you the ability to offer credit and I can shop around for different back-end credit providers that could give you contextual credit at the time of purchase, you are circumventing the need for a customer to use a credit card, but you're also, potentially deepening the relationship because now you have a credit relationship, tied to the service or the product. So it's, exactly. there's an obvious threat to the banks here as well, because pretty much anyone can now be a lender with sort of contextual credit. So maybe Matt, how do you see embedded finance broadly affecting banks from the ecosystem perspective?
Yeah, I'm gonna hit it two ways, Brett, real quick. One, Becky described a use case, but think about all of us, right? If we were using a piece of cloud software to say, run a medical practice, that ability to never have to switch out of that software and be able to look into the checking account, look into the GL and recon a transaction across the flows. 99% of the globe today's got to log into 3 to 4 pieces of software to track a particular transaction. This concept of embedded finance is not just offering these different products, but creating unbelievable experiences for the operators and the owners of these businesses through the software. So I think it's going to take off really quick. I think the way the impact on banks is actually it's going to help a lot of banks become increasingly relevant in a digital delivery age. At FIS, we have over 5,000 banks. We've got key software around core issuing, et cetera. So we're very well positioned to seize this opportunity because I don't need to bring in a stack of third party. We actually can expose a lot of this product natively right through our own product suite. And the reality is that equates to business value to the operator because they're not sourcing from 12 different vendors. For us, it's about actually grabbing some of our existing banking partners that are making investments in digital cores, digital issuing, et cetera, and inviting them to party. Because the reality, why buy now, pay here later, and some of these merchant cash advance products have been around for decades. Traditional banking products are still winning. And for us, it's about bringing the right relevant banks to the party. We talked about regulatory, et cetera, bringing some of these parties up and going, hey, would you like access to new distribution through these digital platforms? We're seeing, lots of hands raised. The question is, they're going to have to show up from an operating model and digital perspective to do it. So I think there's a place where banks and these technology companies can coexist. But in that, and I'll end with one thought here, and that is, as we go through this recession that clearly we're in, I think durable balance sheets, durable technology is going to win. And we saw this in 2008, Stripe and Square's emergence coming out of the other side of that. So I think it's going to be interesting times ahead. And I think there'll be some traditional players that win. And I think there'll be some new entrants that win. But I believe that vertical integration will be a structural advantage as this market trend unfolds.
I have to say, Matt, that's a very US-centric view because, if you're in China, there's no way you'd be able to say that, right? There's no way you'd be able to say that the incumbent banks are going to come out on top because of this infrastructure. That's the challenge.
I didn't say all of them, Brad. I said some of them.
Yeah,
some of them evolve.
Yeah, that's good. All right, well, interesting conversation. Maybe Becky, I'll give you the final word. Take us out, 5-10 years, and what is the world of embedded payments going to look like finally?
Yeah, I think the winners here are ultimately, in the word we've said a lot, is context, right? We talked about contextual credit. We talked about kind of payments in context. We've talked about glasses and other authentication methods. But I think regardless of where all of that goes, what we're all looking for is something that feels very natural in the order of what we're doing today. And so I think that the winners of embedded payments and embedded finance in general are the ones that are able to deliver those services in context. In the moment I need it, with all of the information they have to go ahead and pre-approve that. I think that continues to take the lead, and any sort of friction or the decision-making process, I think those folks, that's what loses, right? That's where we see the losses.
I agree a lot like Becky. I think the winners in this spread are going to be the ones that create really unique, compelling workflows and use cases for their company. And I think we'll see three giant TAMs, that being banking, payments, embedded finance, and embedded SureTech, which is almost 11 trillion in TAM. I think the lines are going to get significantly blurred over the next 3 to 5 years.
No, there's a huge opportunity to disrupt this space still, given what we've seen with mobile wallet usage offshore and the slow adoption of mobile wallets and embedded stuff here in the US. Becky, how can people find out more about Qualis and the work you're doing?
Yeah, absolutely. Find me on LinkedIn is the easiest place. So Becky Kopplin on LinkedIn, Qualis Partners.
Awesome. Just to summarize, if you want some more information, go to www.fisglobal.com/worldpay platforms for more information on WorldPay. That's www.fisglobal.com/worldpay platforms. That's it for this segment. Stay tuned with us. We're going to have a quick break, and we'll be right back after the break with some more fintech goodness. Welcome back to Breaking Banks. Continue our tradition of having best-selling authors on the show to launch their new books. We have Diana Kander joining us today. She is a New York Times best-selling author. She's just got a new book out. It's called Go Big or Go Home, which I thought was an Australian expression, but maybe it's a global thing. But Diana, welcome to the show.
Thank you so much.
So how do you go big or go home?
So go big or go home is a mindset more than anything, which says that in today's hyper competitive, frequently changing environment, if you can't create a memorable experience for your customers, then you'll be instantly forgettable, regretfully mediocre, and you won't win the business as often as you should.
Now, is this an epiphany that occurred to you, in your career in terms of differentiation, or is it something that gradually you learned to do?
No, this was like an epiphany moment that I had. This CEO who connected with me through a mutual friend called me up and was like, I want to write a book about our company. They have this company that creates experiences for like sports teams and colleges. And I was like, okay, good for you. Like I took the call on my treadmill, walking my dog, like zero interested. And he was like, well, why don't you come in and take a tour of our place? And I was like, fine. So I walk in, he gives me a tour of this pretty cool, like 200,000 square foot facility. And then he stops and points to this giant thing. And he says, that's the world's biggest 3D printer. And I was like, okay, that's pretty cool. And he said, we used it to win, like building the biggest 3D object for the Las Vegas Raiders. And I was like, oh, well, that's pretty cool. He said, yeah, we have a move in our company. When we really want to close a deal, we call it the LTF. And when we do the move, usually our typical close rate is 45%, but the LTF close rate is 90%. So of these harder to win pitches where they have sometimes no business pitching, they win 90% of them. And I was like, okay, now I want to know more. And as I became obsessed with the idea, I started interviewing their employees, their customers, and really understanding the science behind how it worked. I was like, this is a game-changing idea that now I have to tell everyone. And by the end of it, I was begging him to co-author the book together. He's the co-author on the book, Tucker Trotter. And
so what does LTF stand for?
We had a big debate about whether to call the book, but it stands for land, the, and then F word.
Okay.
Yeah.
All right. Fair enough.
Face plant.
So it definitely does appear like a mindset approach to this in terms of like a lot of it is thinking. But you talk about the fact that, getting an emotional connection with a potential business partner, whether you're pitching business or whether you're selling something, is really critical. And it would appear like because we're relying more and more on technology these days, I get these cold calls, spam robocalls, I get these spam emails, and, I don't know how they get any return on investment off those sort of mechanisms anymore. So it would seem to be, a point of differentiation to be emotionally connected with someone and someone's brand. But how do you start that off? Does it involve a lot of planning? How do you get to know where the emotional connection is going to be most powerful?
So a lot of us care about our clients and our business and what we do, but we have trouble showing it. Just like in our relationships, like sometimes you don't know the thing to do to show the person you love that you love them. And this book provides this scientifically backed framework for specific things you can do to pique their emotions and really feel like they're connecting with you at a very fast pace. So I can kind of go over the framework, and then I thought it would be fun if we talked about how this applies in the banking space, what you've seen banks do.
Yeah, we can do that.
Okay,
yeah,
cool.
No problem.
So
Go ahead.
The first tool is that you add an element of surprise. So typically, your listeners are very savvy people who've read a lot of books, and they know that our brain loves to be an autopilot, like conserve energy as much as possible. And so when we experience things in the world, we usually forget them almost instantaneously after they occur. But if you can add surprise, it's like a reset to the brain. It makes you pay attention, be curious about what's going on. So the best ways to add an element of surprise is to do something, unexpected. That's so funny that you expected me to say the word unexpected. So I was thinking about, I will tell you, I had a friend who worked at a bank, and she really wanted me to be a customer. And she kept asking, and I was like, no, I got my routing number memorized. And she's like, what can I do? And I was like, I need a full body tracksuit. And she was like, what? And I was like, well, if I'm going to change banks, I want to advertise it to everybody. At the time it was called MoBank. I need a MoBank full body thing. And she was like, got it. So she sent me a package at work, full tracksuit that fit me perfect. And like that, like, how can we create an element of surprise, something that is out of the ordinary that makes people be like, this is different. These people are different.
Yeah, I think that, there has been evidence of this emerging more and more in banking over the last few years because, if you look at the challenger banks around the world, they're amongst the fastest growing banking institutions globally today because they can acquire customers at digital scale very, very cost effectively. But also, if you look at many of the new design features that have become recent standards, particularly in the mobile app world, they've been pioneered by these new players. So they have been looking for that differentiation in experience. And particularly in markets like the UK, where you have a bunch of challenger banks, this has now shifted expectations of the traditional players in those markets, based on the better customer experiences that have been created by these emergent players. And so I think there's, strong evidence to suggest that you can move the needle through customer experience in that way, which in conventional wisdom in the banking sector, banks would have thought that their banking charter was what made them special. And that's no longer the case. And certainly it's not their branch locations, right? Because most of us don't use branches anymore.
No, I think it's important to map out the customer experience like a movie, like there's different scenes, and then think about the different pivotal scenes and how you can add these elements to each one. For instance, as a banking customer, I expect when I open a new account, they're going to give me a pile of paperwork and tell me to fill it out and come back. But how surprising would it be if they were like, what's your company name? Okay, you're a client. And you were like, what? Yeah, it's all set up. Here's your information. That took a few minutes. it's possible today. It's just that none of us think about how to add those elements.
Absolutely. So you talk also about magic moments. Those magic moments, I assume, are more relationship building, in terms of developing rapport with customers. But, increasingly, because we have less physical contact with people. I mean, it's fine if you're walking into a bank and you're meeting with someone, with a customer, but increasingly we are relying on digital engagement. So how do you create that sort of emotional connection digitally?
So a lot of banks have, I think, high level relationships that they can apply these tools to. I do think this works better in a one-on-one setting. I think it can be applied digitally. It's just that for the research of the book, we focused on a B2B setting, right? So I think you can still create magic moments, and there's lots of sites that prove otherwise, including a lot of the competitors that you study that are overseas.
Yeah, absolutely. So when, how did you get into the whole writing space yourself in terms of, what was your story arc in terms of becoming an author and, getting on the New York Times bestseller list? Explain that journey for you personally.
Sure. I was an entrepreneur, started a number of different businesses. Some of them did really well. Some of them did really poorly. One in particular did exceptionally poorly. So it was a rocket ship ride to the top and bottom. And while things were going poorly, I started journaling about what was happening. And that journal eventually became my first book. And since then, it's about a decade ago, I've become a person who tries to find these fascinating ideas out in the world and share them with as many people as I can, oftentimes in the business setting. So to me, this framework, this magic framework, that's the 5 tools kind of spell the word magic. It provides a completely different way of thinking about how you approach customers, how you think about differentiation, and the things that are available to you. For instance, one of the tools is to add 3D objects somewhere in your experience. So what does that mean?
Something that is. What does that mean?
It's different. So we're on video now. It's just different when you hold something in your hand, or even when they see you hold something in your hand. Yeah. And when you're in banking, you're selling invisible ideas. So how can we bring that out of the brain only world into something that they can see or feel to represent the ideas? So for instance, you can have a 3-dimensional object of what your fees are at your bank. It's like a very small jar of money versus the competitors' banks. They charge you fees for this and this and this. And so an average person pays a lot more. But if you can physically represent that to somebody, the idea will be more memorable in their minds.
And when you start thinking about sort of the emotions of connection and so forth, how do you turn, I think there are gimmicks you can use to initially grab someone's attention, but how do you develop a culture of consistently doing that? Because if you're consistently surprising people, that must mean that, you're innovating at a quite a steep rate, and that's something that traditionally banks have quite some difficulty with.
Well, I think it's about constantly challenging ourselves. I posted an article on LinkedIn just yesterday about how a bank had hired a Ritz-Carlton customer service trainer to teach their internal folks on how to interact with their high net worth customers, because they understand that just looking at their own best practices or even competitors' best practices isn't going to differentiate them. So I think there's a lot of opportunity, so much opportunity for us to create these special moments. It's just, where do we go to look for the inspiration, and how do we hold ourselves accountable to keep doing it and to not rest on our laurels? Every dollar you make is a reason not to change anything. So how can you decide to change something and go big so that you can benefit for the next decade?
And tell me about your writing process.
Sure.
I mean, obviously we've had a few different authors on the show. Kevin J. Anderson, who's done 70 New York Times bestsellers. So envious. Kevin goes on these hikes and dictates his books into a dictaphone thing, and then someone transcribes it, which I think is just incredible.
Yeah, I wish.
Particularly because he's doing sci-fi narrative stuff instead of I can imagine writing a business book potentially like that. But anyway, and then I only write in coffee shops. So I had great difficulty writing during the pandemic because of lockdowns. As soon as lockdowns were over, I actually traveled from New York to Thailand because Thailand, we have a residence there, and Thailand came out of lockdown sooner. And so that enabled me to get back in the coffee shops and finish off my book. I was just in South Africa last week and I was writing there in a coffee shop, great coffee shop in Cape Town. So that's my process is, I need the Wi-Fi and the white noise, of the coffee shop around me. What's your process for writing?
I think the best way to sum it up is I write a whole bunch and then cut away the vast majority of it. So this book takes an hour and a half to read. It's like 20,000 words, but we easily wrote 50, 60,000 words and then just cut away everything that wasn't amazing. So there's a lot on the cutting room floor that includes amazing stories that just, didn't quite fit or weren't good enough for the book. And so I'm as proud of the cutting room floor as I am of what made it into the book.
So do you use an editor that you've worked with before, or is it?
Yes.
Okay.
I think the more people you can get involved in the project, the better it will be.
And tell me a bit more about Tucker and why you chose to write the book with Tucker.
Begged to write the book with Tucker. I mean, he is the source material. So it's his philosophy that kicked everything off and his business practices. He just didn't know why it worked. He just knew what they were doing. And I was able to provide the science behind it, as well as find the additional stories of other organizations that were creating this kind of magic with their customers.
And so what was that magic sauce?
It's turning your sales process and thinking about it like an experience. So think about how you interact with your customers like scenes of a movie. Or if you ever watch political debates, they have at the bottom those like emotional responses from the audience, the little ticker that goes up and down. So think about your customer process with those little emotional tickers and think about the highs and lows. And unfortunately, for most of us, it's just a straight line, which means, no heartbeat, no peaks. And when he started thinking about how to create these magic moments, it changed everything. And I will tell you, it changed everything for my business, which is keynote speaking. How I interact with prospects now is completely different, and I'm closing a much higher percentage of deals. I'm having a lot more fun, and I think I'm building relationships much faster than I ever have.
I mean, you're a super energetic speaker. I think that comes across. That energy is contagious for audiences. It's an important tool set to develop as a speaker. But did you start off as a speaker like that, or is this something you've learned?
No, you get better. You get better at everything. But I will tell you that a lot of speakers, and I think a lot of banks, this is how we connect, feel like their website doesn't fully represent how awesome they are. Doesn't communicate all of that emotion and caring that they have for their community and their customers. And I think if you shift your thinking from, how do we create features and benefits for them to the process of how we interact with them and how we can add a little bit of emotion to it, it completely changes the relationship.
Now, in terms of sort of your core branding, in fact, looking at your website, you call yourself an innovation nerd.
Yes.
But proudly. You say that, but you also say that growth starts with curiosity.
Yeah.
It would appear to me that those two are quite closely related, that to be good at innovation, you have to be curious. So what are you researching in the world that helps you keep that edge in terms of innovation? Obviously, you spent time with Tucker and his team and embedded there to do that. But how do you keep your energy levels up? How do you keep excited?
Well, the opposite, Brett, of curiosity is certainty. And when you have certainty in your life and in your world, then you don't need to look up any other answers. And when you can be open to new ideas, new experiences, I had zero interest in writing that book. But when I was invited on a tour of Tucker's company, I was like, all right, I'll go. I'll say, this could be interesting. And I think the more we spend being open to new experiences, new ideas, going to conferences in different industries, which could provide value to ours, I think we're going to get those ideas. It's just that we're so sure we show up to work with a to-do list and that's all we need in our life is just checking things off the to-do list. And that doesn't leave any space or room for curiosity. So I almost try to force it in my life. So one way I have forced curiosity is I'll take my best bit from a speech and then I'll forbid myself to use it for 4 to 6 months. And I'll say, okay, you got to come up with something else. And sometimes that something else ends up being even better. Sometimes it's a train wreck, that's what happens when you try.
Well, it's a learning process, right?
Yeah. But that's how you get to keep evolving as opposed to being hey, remember that cool thing we did 10 years ago? Which is what happens at a lot of organizations,
right.
When you ask
for
their
trade off that for a long time, right?
Yeah. So
but it loses effectiveness over time. Right.
And it's scary writing a book called Go Big or Go Home because the bar is set pretty high.
Right. You have to go big or go home.
But that's what I'm talking about, creating accountability for yourself, is to say, no, I will decide that is the bar that I want to be responsible for as a person, as an organization. And that kind of, commitment is felt by your customers.
Tell me about the 3D printer technology they were using and why this was such a focal point, because I know you have also referenced this in your public speaking. You tell a story about this as well.
Yeah, well, it's about thinking about how to do, surprising your customers. It's about thinking about how to do ordinary things in non-ordinary ways. So when the Las Vegas Raiders were looking for this torch that they wanted built for their new stadium, it's this 9-story torch. I mean, this thing is huge. DI said, I think we could 3D print it. And
so it was a metal printer, or because
what?
Was it a metal printer?
So it's carbon fiber.
Oh, carbon fiber. Okay. Because I'm just thinking if it's a torch, you don't want it to burn.
It's not an actual torch. Right? Yeah.
Right. It's the casing or the display of the torch.
That's right. Okay. And so, but that's a great metaphor for us of how we can do ordinary things in non-ordinary ways. So for instance, when we're interacting with our customers, the easiest thing to do is to send an email. The more interesting thing to do would be to send a video or just something that is out of the ordinary. My favorite examples are people who apply for jobs that put their resume on food items, like a cake that they send to a person's office, or cupcakes, or as the wrapper of a chocolate bar. So surprise means think about the ordinary things that we do every day, but how can we do them in non-ordinary ways? And that non-ordinary delivery really makes it stand out.
In terms of your personal journey, your arc in this, who has surprised you in the past? You mentioned the bank example. Someone wanted you to join their bank and sent you a tracksuit. But is there something that these people share in common in terms of capability? I know, obviously, you can learn this skill, but for people, like your co-author and others that you've met and interacted with, what is it that has made them surprising?
So I just think that as you're experiencing the world every day. You should keep a list of any time you encounter something and you're like, oh, that's clever. And I keep a list. Actually, this morning I saw an author send out a mass email, and at the bottom it says, please respond and tell me what you do. I promise I read each one of these. This is my personal email. I check it every day. And I was like, oh, that makes me feel like she actually cares. I will use that. I will copy that, you know? And so when I was sending out books for people to review, I got an email back with a video, and it started with like a musical number of somebody's response to me. So these are things that you don't have to buy the world's biggest 3D printer to create surprise. You just have to spend a couple extra seconds thinking about what is a little bit of a different way for me to deliver this kind of content to my customers. And I think that we've been doing it the same way for so long in banking that the amount of opportunity is, huge.
Yeah. No, I think we're going through a massive change right now in terms of modality of banking and so forth. Most bankers don't realize that mobile wallets have now surpassed plastic cards, as an example, for day-to-day banking use. And so a lot of that innovation is occurring right before our eyes, and yet most banks are still doing the same things day in and day out. Years ago, it's 10 years ago now, in 2013, I was invited to the board of JP Morgan Chase and to present to them on, at the time, it was my book, Bank 3.0. It was a 30-minute conversation or a 30-minute presentation and a bit of Q&A at the boardroom. And, you're sitting around the board and you've got people like Jamie Dimon and so forth there. This is in New York City, at their headquarters. It's hard to surprise them, but I did manage to surprise them. I'll tell you what we did. So, I was spending this time, and I was obviously talking about digital as surpassing, branch, and you're going to have to be of the mindset that every product you sell has to be sold outside of the branch, executing digitally. And of course, can't remember his name now, Tony, the head of retail, was like, but our branches are massively profitable. And I said, well, I think that's a self-fulfilling prophecy, because you force customers into the branch. Like, you can't sign a mortgage up online at the time at chase.com. You have to come into a branch for a mortgage. But even let's argue that was the case, that branches were profitable. You're misaligned with, your emerging customer set. And they're like, what do you mean? I said, well, think of a millennial, or let's take a Gen Z, right? What's the first thing if they happen to walk into a branch, which is, I think, increasingly unlikely, but let's say they walk into a branch, what's the first thing you're going to try and sell them? And, there's a few looks around the table, and the head of retail says, well, a checking account, of course. And I said, why? They're never going to write a check in their life. And you could see the penny drop, right? Is that you're selling the primary product. You're selling, and, to your customers who are digital natives, who are never going to write a physical check and put in the mail and send it to someone, because that's not the way they think. The primary product you're selling them is a checkbook. How does that make any sense? Why didn't you call it a mobile bank account? And I could see, looking around the room, they had never had that conversation. And they'd never had that conversation because they were thinking that people need a checking account, right? Because that's what everyone's always needed, for the last 50 years. So there are, and the number of banks today that still only sell checking accounts for opening your bank account, versus what we see, with Alipay and WeChat Pay and, Apple Pay. At least with Apple, they have the cool titanium card, which they didn't even want to do a card. They just wanted to use the phone. But, this is the functional ecosystem in the States. You look at these mobile wallet players, and they sell you on convenience. You look at Revolut's success in Central Europe and Eastern Europe. Much of it's been because they offer crypto custody, the ability to buy and sell crypto, which there was just no services in those markets for. I do think that ability to sort of change where you fit in a customer's life in terms of your relevance is important. But doesn't that presume that you really know your customers well?
I think a lot of banks are learning this over the last 2 or 3 years now, but the Radio Shack is really the lesson of this, where we thought that retail locations were the moat that protected our business, and it ended up being the thing that sank that business, you know? And so sometimes that's why you have to stay curious. Sometimes your biggest strength can turn into your weakness. And if you don't keep in touch with your customers and their ever-changing preferences, then you'll be in big trouble. And I think the important thing to remember is that our customers' preferences are not set by us or even our banking competitors, but by every other experience that they have in the world. Amazon sets our customers' preferences.
Right. Netflix,
and that bar is much higher.
Yeah, absolutely. Fantastic. Well, I see the book's done very well. It's been in the bestsellers ranking across all the categories you've got it in. It's in the top 10 for each of those right now, which is always a great achievement. Selecting those categories on Amazon is really important as an author, actually. So Go Big or Go Home, 5 ways to create a customer experience that will close the deal, from Diana Kander and Tucker Trotter. Where can people find out more information about you and about your books?
DianaKander.com. Easy peasy.
Fantastic. And of course, you're on LinkedIn and Twitter and so forth. What's your Twitter handle?
Everything is Diana Kander, and LinkedIn is really
You've got one of those good names. You do it early enough that, fantastic. All right. Well, Diana, thank you very much for coming on Breaking Banks. We'll check it out. Go Big or Go Home. And we appreciate your time today.
Thank you so much for the conversation.
That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.